chance to ask questions, please provide the questions in the chat and use any other kind of possibility to connect. I mean, that's what we are all here for, networking, gaining new contacts. I'm happy to have you all here, but before we start, my dear colleague, Mr. Serdar Yücel, has the chance to introduce the UTech Chamber to you. Serdar, floor is yours.
Thank you, Joyce. Welcome all, dear panelists and the audience. You can please click on Restore Presentation button right, just beside the raise icon, just beside the hand raise icon, button right, you will find the Restore Presentation button to view the slides. We are an NGO, UTech Charity for Profit organization established in 2015 with our headquarters in Germany and our new headquarters at Delhi and our office in Switzerland. And our core value proposition is exposure means networking. We have a very powerful virtual tech platform as internationalization as the three of our core value. And about the alliance organizational structure, we have three group of sections we call alliances, as you see. From LATAM to China, we will be calling it as APAC, and we all the technology alliances covering all the areas, as well impact thematic horizontal alliances. One of them is finance. We are having this webinar today for the Finance Alliance and other alliances to like SDG, climate action, and women in tech. And about the events like this webinar today, we arrange every year more than 200-300 events under all alliances, and we have great speakers like today from all around the world. And we will be doing our webinars, events, hybrid from next year on, offline and online, as well virtual expos. You're welcome, and really pay attention and join us like you today, most the company owner, decision makers and policy makers. And the events are the base networking, and as we are the #1 technology network in Europe, and our mission is to be the leading one in the world. That's why we arrange weekly networking meeting after every webinar, and we will have your this alliance working meeting, and we invite kind of by Joyce, some of you to speak with the panelists later on together with the members of the alliance. There, a second weekly meeting after the webinar, we focus more about opportunities among our members we call advocates, particularly focusing on EU funding and or other development aid organizations from all around, like UN, World Bank, etc., to create synergy and get some funding opportunities. And if we have if we see energy in between the members, then we apply for this, and we write the proposal, and we look for the tenders from EU funding opportunities. The ecosystem we have, it is actually the knowledge and networking. Knowledge is the base for networking. That's why we focus in particular writing white papers and position papers. As well, we have an online Visions for Europe magazine. You can send your articles, and then when we publish it, you can share it online on your social media accounts like LinkedIn. As well, you can send your articles for white papers and position papers, and then we publish your name and brand and picture to make you more visible. Inside the programs, we have digital transformation and other programs you may like to review later on. Under the platform, this is our platform. You will have have their virtual booths, and we arrange virtual expos under the tech.forum platform. And another good opportunity for our members is to access to the database to network with others. As well, you can create and manage your own events, and we have specific features like breakouts, etc., to make it more fruitful for the participants. And you engage and get benefit from our features. And we have 2 lines of membership. One is advocacy and the other is partnerships. And you can get access to our partnership directory for partnership opportunities as well. You, of course, get access to our directory for membership for any specific question. Otherwise, you're all welcome to get back for advocacy, future roles for advocacy. And very much, I wish you all a great Baby Day. Thank you, Joyce. Back to you.
Thank you very much, Serdar. Our first speaker, Ron Keller, as announced, is the father of the euro. He is currently working as an international advisor and speaker. He used to be a former Dutch ambassador and the former chairman at the EU Council Working Group, which set up the Eurosystem. And that what makes his participation today, not only for me, so incredibly interesting. We at UTech are very happy to have him as an advisor, and I'm extremely happy to have him as the keynote speaker today. Ron, please, the floor is yours.
Thank you very much, Joyce, for that kind introduction. Yeah, the success has many fathers, and indeed, I claim to be one of them if it comes to the euro. The euro has a long history of inception. I will briefly, for the discussion's sake, highlight a few elements. Number one, to bear in mind, 20 years of euro, the euro is doing in many ways better than expected 20 years ago. It was still 20 years ago a rather uncertain adventure to set up a joint currency. Bear in mind that if you look at the development of the European Union over the decades, the house is still being constructed in many ways, and to have a common currency is a bit like building the roof while the fundament, the internal market, was still under construction. So normally you wouldn't start building a house with a roof, but we created the euro not because it is a logical monetary unity that we created, not because it was the final part of the European Union that needed to be established, but we have to be honest, the euro was created in the wake of the fall of the Berlin Wall and the end of the Cold War. How tragic that we have war again 30 years now after that, those historical events, but that's for another subject. But when the Berlin Wall fell and Europe reunited, and Germany wanted to reunite as part of that whole political discussion, what would happen with Germany, what would happen with the European economies as a whole, it was decided, at the insistence of France, I should say, to set up a common currency. That was one of the preconditions, or actually was the precondition for France to accept German reunification. It shows that the euro as such is not a logical step in the development of the European Union. Not then, and not now, I should say. But now that it's there, we try to make the best of it. Bear in mind that being the house being still constructed and you already start building the roof, one of the walls that was missing to really make the roof stable was more cooperation if it comes to budgetary policy. You have to bear in mind monetary policy and budgetary policy go hand in hand as macroeconomic instruments. If you don't have a common budgetary policy, but you do establish a common monetary policy, you have quite a challenge, because how will you coordinate the budgetary and the monetary policies if you don't have a common European budgetary policy? That was the puzzle that I had to solve as chairman of the Council Working Group that set up the euro. And we managed to create some kind of a structure, construct of a shadow European budgetary policy by creating the so-called Stability and Growth Pact. And that is an essential element of the whole euro system. It creates budgetary discipline. It aims to create budgetary discipline, and by basically saying that countries should not have budgetary policy, but should always let the business cycle make the budget deficits go up and down. The so-called automatic stabilizers would do their work. So the idea of the underlying Stability and Growth Pact was there should not be any budgetary policy. In the normal circumstances, countries should have a budget deficit of 0. And then in up and down turns, the budget deficit will more or less fluctuate normally in normal circumstances between -3% and +3% of the GDP. That is why the 3% in the Stability Pact as an upper limit in normal circumstances of budget deficits came about. It was simply letting the automatic stabilizers do their work and let the budget deficit on a historical basis grow, develop with ups and downs. In reality, it turned out to be that our political leaders said, fantastic, so we could go up to 3% budget deficits, and they didn't take 0 as the, let's say, the point of oscillation, but they took a 3% budget deficit as the starting point. This is what politicians do. If you don't have a strict and firm budgetary European arrangement. And you see actually from the outset when the euro system came to operate, which we know is about 20 years ago now, that there was continuous pressure in the system, a discussion about budget deficits being too high, budget deficits not meeting the Stability and Growth Pact. Countries saying, well, sorry, I'm in exceptional circumstances. My economy is doing well, but give me a little bit more time. And clearly, it became evident that for countries whose economies was not developing within the agreed budgetary framework, something needed to be done in order to discipline them. Now, the original euro system had so-called penalties. If your budget deficit was too high, if you would not conduct budgetary policy within the agreed framework, you would get penalties. But we all know that it's very hard to envisage that countries would do that to each other, and if only because penalties would make the budgetary situation of a country even worse. So instead of making that penalty system work, some shadow IMF kind of arrangement was developed, the European Stability Mechanism, that made it possible for countries that are in financial problems, that are in economic problems, to borrow money from this European Stability Mechanism, accompanied by an adjustment program. So we built in a kind of an IMF kind of system in the euro in order to make sure that countries would, if they would fall out of line with the agreed frameworks, that they would go back again with an adjustment program into the agreed zone. Despite of all of these repair jobs that were done, I think, looking back 20 years of European currency, it is a success in the sense that it is number 2 currency in the world. I think worldwide it's been accepted as a stable and reliable and credible currency, which is something of a unique, because the euro was a unique and is a unique device. Never in history have countries developed a new currency from scratch and replacing their own currencies with that, and never ever in history of mankind have countries cooperated so strongly in monetary and budgetary policy matters. But we could do better. The flaws are still there. We still don't have a European budgetary instrument. We still lack budgetary discipline in most of the Eurozone member states. And we still see that in the absence of a budgetary instrument, the moment there is the notion that we should stimulate the economy in Europe, and we cannot have a budgetary instrument to do that, then there is a temptation to use the monetary instrument, to print more money in order to stimulate the economy. Basically, you see that was happening after the 2008 crisis. And the last 10 years, there's been heavy debate whether the European Central Bank was within its own rules of the game in order to buy up debts, and in doing so, creating with monetary accommodation such a low interest rate that we know that the interest rates was even negative. That was all fantastic for countries with high debts, basically in the southern part of Europe. But the northern part of Europe, the rest of the Eurozone, paid a price for zero interest rates. And we see now that because of that, we see inflation creeping up, real estate markets being out of balance. So you see that one disbalance and one flaw in the system creates another one. Now, on top of that, we have the pandemic, the corona pandemic, which gave another reason to see budgetary stimulus from member states. And again, the monetary instrument was basically the only one available. We need now to rebalance all of that. And my advice would be that the coming 20 years, the member states of the European Union try to really fundamentally finish the job and to complement the monetary instrument with a proper budgetary instrument at the European level in order to be able to accelerate or slow down the economy if needed. Because Keynes is not dead. I mean, Keynesian policies of stimulating or breaking down the economy is still very much needed. And you cannot let only the monetary policy do that. Final word on digitalization. The digital transformation is the subtitle of this seminar. There is discussion now about introducing a digital form of euro. I would take away instantly expectations that some new tree with golden apples will be developed. It will not be. The idea is simply to have a modern version of the euro, a new, let's say, appearance of the euro in digital format. But all of the policy implications of having a currency, all of the policy rules, and all the monetary instruments that the ECB has at its disposal will remain intact. So don't expect monetary policy to really change. Don't expect the flaws that I mentioned to be resolved either by the digital euro. We'll see in a couple of years whether the European Central Bank will decide to introduce one. It's not there for investment purposes. It is simply another means of paying with the currency that was 20 years ago established and is still doing very fine. Thank you.
Thank you very much, Mr. Keller, for your very impressive words. The audience has the chance to ask as many questions as they can think of right behind after Mr. Boldini's presentation. And Mr. Boldini is a highly renowned professor in banking law, an Italian lawyer. He was appointed as a honorary Italian in the UK visiting professor at the London Institute of Banking and Finance, a senior lecturer, and a very busy man. I'm very happy to have here today. So we have some agenda issues to cover up with. That's why I would like to ask a few questions to Mr. Boldini in order to see his point of view, especially on the regulatory issues, on the point Mr. Keller has mentioned before, and to cover the digitalization aspects in more detail. Why, Mr. Boldini, do you think would consumers want to use a digital euro? What do you think? Mr. Boldini, you're on mute. Sorry, we can't hear you, Mr. Boldini. Mr. Boldini, you have still have some issues with your. Oh, I'm sorry. I'm sorry. This is not supposed to happen. We have some sound issues. Let me clarify the sound issues with our technique specialist. Markus, can you unmute yourself and give your part of the presentation, and let us solve Mr. Boldini's technique issues before. Markus,
So I could start my presentation, but I don't know if you can hear me.
Perfectly, we can hear you. We can hear you. Technical problem solved. Sorry to everyone. I mean, this is a live webinar, and
okay. So I'm conscious of Markus' time.
Things are not supposed to happen, but they happen. But I'm very happy to hear you now. Thank you, Markus.
Okay. Is Marco back again, or shall I start?
Marco is not back again.
Okay. Perhaps it's an issue with this headset, because when we were testing, it was without headset. I will have a dash through my presentation because I'm conscious of Markus' time, so that perhaps he can have another 10 minutes for final presentation. I will start sharing my one if this is okay for you.
Absolutely okay. Thank you.
Yeah, okay. So there must be opportunity to share my presentation, which is not far. So if you give me the right to share the screen, this would be great.
Right is approved right now.
Okay. It does not allow to share it, frankly. So now got it. Okay. And we have the slide presentation, and I will allow this. So what you now should see is a new agenda slide, because when you introduced and invited me to this presentation, first of all, I thought, well, this is an illustrious circle of economists, and what can I say to the whole framework of a monetary system and the development of the euro from a bank practitioner's perspective. And bank practitioners, you see this from having some slides that I do present. Well, first of all, I read in your invitation that you say there's a changing framework, there's a new economic development, inflation, digitalization, all these things. And these things make feeling a banker like being in the middle of a chicken pile. And so bankers sometimes get a little bit nervous when it's about all these changing things around. And I thought, okay, I would gather some thoughts of what I could tell you about this framework of a monetary system developing in 20 years. But then just yesterday, is not 24 hours ago, I joined a seminar of one of the international rating agencies, and they talked about the euro and the framework and the development. And they talked about what the war and all the other post-pandemic developments will mean to the euro. And you can see on the page here on the left side, there's consumer confidence going down, there's inflation going up, and there's monetary reaction from the central banks, and even some state interventions being expected. However, and this was what really surprised me, is that the stability of the monitoring system seems to be greater than all of us do expect. And so I did throw away many of my previous thoughts and just said, come on, let's start into some thoughts that I would like to discuss with you in kind of a question. And it's 3 questions on the framework of the monetary system and on the stability of the EU in future. These questions I would like to pose to you in the next 3 slides and in the next 6 minutes. The first question I would like to ask is, will digitalization complement or will it replace? So is the digital euro a substitute for the physical euro that we have, or is it not? And when we asked and answered this question, then frankly speaking, digitalization is a booster to everyday's life. It is a change, but it's also a booster to everyday's life. However, as with all new technologies, and I think this is clear to many of us, we have to wait on opportunities and risk, so that the risks are not unnoticed. Especially in financial markets, digitalization is a very intense fostering momentum, because financial services from history, but also from nature, they're intangible, they're immaterial, so they can be easily put into digital structures and can easily be fostered by using computers. In general, digital finance is something that is nothing new, but is something that is rebranding standard things. And many of you have heard about innovation in financial markets. Personally, as an innovation manager, I'm a little bit sick of if many things that we hear of financial are real innovations in the sense of innovation hype and really advanced, but it's more or less that they have a new code, that they have new strategies, and they have new marketing and new digital background. So examples for digitalization that will change the framework of financial markets and fiscal policy are blockchains. Ron just mentioned this at the end of this presentation, when it was a blockchain technology and perhaps a digital euro. The blockchain technology is something that allows faster and more reliable, secure payment and financing processes. I won't go into detail what the blockchain itself is, but I was really fascinating 5 years ago in Paris on a convention. I saw a blockchain model in development financing when it was giving venture capital for startup companies in developing countries by using blockchain. Not the traditional way, not the paper and application way, but by using blockchain. And this was really tough to see how things can change and how fast this can be. And artificial intelligence, just the introduction for your seminars that we just heard, artificial intelligence is something that could speed up and make it much more easier to handle the enormous amount of data that we've got around us in modern times. So having these as a summary and conscious of time, my conclusion is that digitalization is the foundation of resilient financial markets in future, because our world is complex, and within the complex world, the amount of data and information is that vast that we have to have some digital underlaying to manage all that. Second question. Regulation, and this also goes a little bit to what the next presentation perhaps will focus on a little bit more. Regulation often in financial markets was regarded as a bad thing, so bad thing, you may ask that. The traditional way of having a look on economic models was different, because the market models and the assumption for these models were different and based on rationality, complete information, efficient markets, and so on. So in those kind of markets, and this is very, very tough summary, regulation was not really required. And even external effects were not seen in such markets. When I was at university years ago, I remember one of the statements of Milton Friedman that I was taught, and it was the corporate responsibility is a subversive doctrine. This was something years ago could be stated, because the assumption of market models was in a way that markets encompass all. There are no external effects, just to have it a very, very easy one. However, with such a market model, we came to a situation where systematic risk came up, and we had a situation where financial crisis brought us a consciousness that the market models are not as complete as they should have been, perhaps. And therefore, as you can see in the second bullet, the reform regulation did not come only from the supervisory side, but also from the part of the banks. And one example of the regulation coming is from the EU. It's EU taxonomy. Some of you are focused on sustainability, SDGs, of this. The others from the media, when it's about nuclear energy being a sustainable kind of energy, we can discuss about that. But all these things are regulated by the European Commission in this EU taxonomy, and the taxonomy is a framework for financial systems, especially for banks, when it's about how to find out what is a sustainable action they should finance or what is they should not finance. It's overregulation, to my point of view, because the complexity of rules and the relevance to sustainable development that it's focusing on is a little bit too deep, and brings the focus away from real sustainable development and impacts that we should have. But in general, my conclusion is that regulation and the reputation and the structural setup of the financial industry still has room for improvement, and in this improvement, regulation may be an impulse for innovation, even if some kind of regulation currently overtaxes the targets. Last thing, will the future be digital or will it be green? Well, coming back to the last two slides, the financial system will benefit both from digitalization and from regulation, especially in the field of sustainability. And in the long term, we have to confess that neither the monetary system nor the financial economy can be stable without a stronger view on digital structures. Same with sustainable development. Our society will not be able to go on with a present way of living, and we have to have changes that will be fostered by thoughts of sustainable development. And if we bring both things together, then we will have civilization that can help to have more equality, better access to resources, and acceleration of sustainable financial market segments. So the question that you see in the very low bullet, will digital mean more sustainable? Yes, this is my understanding. Digital will mean more sustainable, and especially digitalization is a prerequisite for a sustainable change and sustainable transformation of our society. So the conclusion is, it's not it's not will be digital or green. The conclusion is it will be digital and green. And this is the conclusion that we will see from many, many other stakeholders too. So if you're interested, and the slides will be shared after this presentation, you will find some other further reading and some sources on this that especially focus on the role of central banks and of regulators in fostering sustainable development. So conscious of time, after 10 minutes, I hope that now the sound issues have been solved, and Marco is in a position to have his presentation 10 minutes before he has to leave. Questions, I think, afterwards.
Thank you. Can you hear me?
Thank you. We can all hear you, Marco.
Fantastic, great.
We can all hear you.
So Joyce, you started our conversation with an interesting question, I would say. I remember that we started talking about why a digital euro be essentially interesting for consumers and so on. Let me first give to our audience a little bit of framework in terms of the legal background surrounding these discussions on digital euros, because obviously when we talk about digital euros, we cannot underestimate the importance of the broader digitalization, cryptocurrencies, electronic payments world, which of course are all different in terms of legal basis, usability, and technology, but they all start and stems from a cultural change which is happening at the moment. And the cultural change is especially in relation to the use of digital technologies, blockchain, new type of communications. And until we will have regulations trying to catch and capture these new instruments and the new disruptive world, we will always live in a situation where we think as lawyers and as regulators that we are not in a position to regulate everything as we would like to. But then the question becomes, is the way to regulate things as we have done in the past the right way to regulate something which is disruptive by nature? So in other words, if we have a new regulation like the MiCAR, for example, which aims to, broadly speaking, regulate cryptos, but then after the regulation has been issued, we already have 2, 3, 4, 5 new different cryptocurrencies that were not included in the MiCAR regulation, for example, because they didn't exist. What the regulator should do, should start doing annexes or new versions of regulations, creating then confusion or maybe fragmentation. So before entering into the details of my speech and the questions you asked me, Joyce, I want to make very clear that in my personal opinion, as a lawyer and as an academic, I think regulators across the world should now change the way they regulate financial services, because otherwise we try to regulate in an old way what is disruptive by nature, with the risk to keep running and running to make sure that we capture everything before it's too late. Having said that, and going back to your question, obviously consumers are interested to use a digital euros for various reasons and for many reasons, in my opinion. But of course, from a central bank's perspective, why also central bank are considering issues central bank currencies is because essentially central banks have the responsibility to sustain confidence in their currencies by maintaining public assets and have full usability of central bank money in a world where consumers and firms, as we have said, are turning more and more to electronic payments. Very simply, if demand to use cash for payments continues to decline, obviously this is an important point for the liquidity of cash, where the liquidity of cash will gradually fade. Obviously, if the sphere of commerce in which it can be used shrink over time. We have seen, for example, in COVID-19 what happened. And so central banks are seeking, with the issuing of a digital euro, to preserve the usability of central bank money. And the digital euro would be a digital means of payment, essentially, that presents much more reliability, is much more secure, is used to use, and it's possibly also a cheap compare to cash as of today. It would be, for example, free of cost for people using it for basic payment needs, and could be used everywhere within the euro areas. So to cut a long story short, why we think it would be interesting to consider the issuing of a digital euro for central banks, clearly to avoid speculations. We have seen some states, for example, Nigeria and many others, that to avoid speculation and incursion from cryptos across the world, they decided to essentially have a central currency. Essentially is backed by a central bank. And also, the central digital currency can also be designed around citizen needs. And this, again, will avoid speculation and can be reassurance to citizens that is a very safe method of payment in line with new technologies and new platforms. So it's a very complex question, actually, and there are various things that we should talk about. But maybe this is just an introduction or food for thought for the next webinar.
Thank you very much, Mr. Boldini. And food for thought is a very good catchword with our topic. Looking at your agenda, do we have the chance to ask you a last question? Because I'm really really interested in following your theses. I'm really interested if you think is there a need for a monetary law reform to take a broad perspective on the issue.
Again, it's a shame we don't have a lot of time to discuss this. But first of all, let me link this answer to what has been said by Ron at the very beginning. I don't think that central bank currency will be a major issue from monetary policies and financial stabilities in the euro area. However, as a provocative thought, I would also highlight three things. The first one is that obviously the nature and the scope of the opportunities offered by the central bank digital currencies is still a matter of debate in the euro area, as long as participants are interested to develop the topic. There are also risks. Risks are very, very much debated, not only at an academic level, but also at local regulators level. One frequently mentioned opportunity is that the central bank digital currencies would support the digitalization of the European economy, which is true. But a possible downside is that the central bank digital currencies could significantly expand the size of the euro system's balance sheet. And this would materialize if the euro system, in exchange for issuing central bank digital currency to the general public, has to take a larger volume of assets onto its balance sheet, which could lead to a situation where the quality requirements for such assets are lowered. And that would expose the euro system to an increased financial risks. Why a monetary law reform could be useful, linked to what I just mentioned. For example, if we look at token-based central bank digital currency, we can easily see how many interesting legal perspective we have here. For example, to legally equate the token-based central bank digital currencies with banknotes, we will require significant monetary reforms. Countries will first need to consider whether this type of central bank digital currency should and could be granted legal tender status, for example. One option in this limit discussed among regulators is to limit the legal tender status to a closed category of sophisticated entities, state, public bodies, merchants behind certain limits. And again, this includes a monetary law reform thinking. As a next step, countries will then need to analyze the private law classification of token-based central bank digital currency, and whether this new form of money should be given privileges under private law, in particular with a view to promote circulation. And again, authorities would have to review the definition of cybercrime, for example, just to make sure that they clearly cover cybercrime offenses against central bank digital currencies. Different for account-based central bank digital currencies, where no monetary law reform is envisaged at the moment or even recommended, and it strongly depends on the fact that the products are completely different in terms of how they are backed and how they are built. So is again a very, very high level discussion, but I think the takeaway message here is that if we want to analyze the importance of digital euro from a consumer's perspective and from an institution perspective, we cannot underestimate the importance of having a solid set of regulations which spans across the board, from privacy law, anti-money laundering, cybersecurity, and so on. Secondly, if we want to talk about monetary law reforms, we need first to understand the real impact, if any, on the monetary law reform, and also enter into the details on the various nuances that the central bank digital currency could have, especially if we are looking at a token-based central bank digital currency or an account-based central digital currency. So essentially, to cut a long story short, I think from my perspective, and this is the legal perspective, the legal view, the regulatory view, we are at a very early stage. It's very difficult at the moment to predict the impact of the central bank digital currency from a legal, regulatory, and monetary law perspective. But on the table, we have a huge amount of potential consequences that, even if they look very far from where we are at the moment, we need to consider them now to avoid what I said at the very beginning, for example, with MiCAR, where we have a fantastic set of regulation for cryptocurrencies, but there are so many gray areas for cryptocurrencies not obviously included in MiCAR, which remains floating around without a proper regulation. We need to change the way we assess the new instruments to make sure that we create something which is flexible enough to predict every and single consequences. And this is true now, and it wasn't probably so true 30 or 40 years ago. And this is true now because with new technologies, we cannot predict the development of things that can have an impact on something that we are creating now. Hence why, and I will conclude here, in 2018, a document called the Khalifa Review was issued in the UK under request of the Minister of Treasury. Khalifa is a senior advisor, obviously, in the field, and he drafted, with other experts, a report on the status of the fintech in the UK. And the question was, broadly speaking, what the UK has to do to remain at the forefront of the fintech ecosystem. And the answer, essentially in more than 60 pages, can be summarized as follows. To make sure that we create products that work from an economic, financial, and legal perspective, we need to make sure that our regulators have the right skills. It's no longer the case of having lawyers, full stop. Regulators across the world need to have a very, very broad base of professionals, from IT professionals to quant, to mathematicians, to legal, to economic people. And this is due to the fact that we need different competencies. And I'm very, very convinced that the central bank digital currency would be a fantastic opportunity for the European Union to continue to control in a way and make sure that European citizens can use digital platforms in an economic and efficient way without losing the confidence they have in a central bank digital currency.
Definitely. Thank you so much, Mr. Boldini. You have given us tons of good impression and good things to think about in the near and far future. You are, as everyone else, of course, cordially invited, if your time allows it, to join our next networking meeting of the Finance Alliance Group on September the 7th.
Thank you very much.
You're welcome. And I would like to start. I mean, we have been given so many good points to think about already, but I would like to start asking a few other questions to the other panelists. And I'm especially interested in Ron Keller's view on the fiscal discipline. And I mean, I'm wondering, Ron, is fiscal discipline a necessary prerequisite for a safe euro on its way to digitalization?
No, thank you, Joyce. You need to have some arrangement on fiscal policies if you have a common monetary policy. It's as simple as that. And whether you call that discipline or whatever, but you need to have a notion about what you do with your budgetary policy. I mean, it's like, I have two hands, right? I mean, monetary policy is one, budgetary policy. The two are linked together in my mind. The two work together in my mind, my two hands. You can, if you just tie my one hand on the back, it's more difficult for me to coordinate or grab something, if you know what I mean. So in order to conduct proper economic policies in the European Union, and to conduct macroeconomic policies, because monetary policies and the currency is not an aim in itself, it's an instrument. It's an instrument for creating prosperity, stability. That is what economic policies are about. Monetary policy is just one instrument, but you cannot use that in isolation. You cannot use monetary policy in isolation. Actually, it's not only that you need also complementary budgetary policy to make it work, but you also need structural policy. This is another point. I mean, ideally, an ideal currency zone has one other instrument on budget, and it has one consistent set of how the structural economic development is going on. And we started with the euro with 10, 11 countries that were in different phases of development and had various structural problems. The Greek economy was completely different from the Dutch economy in terms of the way it functions, the way the structural challenges are, the labor market functions, the real estate market functions. Nevertheless, we were in one monetary. The budgetary policy of the Netherlands and of Greece were fundamentally different. Greece had a long tradition of budgetary deficits, hence a high external debt. The Netherlands has zero external debt. I mean, so you have a completely, and these were all of a sudden coming together and facing one monetary policy. Now, the monetary policy, which is good for the Netherlands, might not be good for Greece, if you know what I mean. So there's an enormous sense of convergence needed in order to make it a perfect convergence of behavior, convergence of economic behavior, I mean, convergence of structural behavior, structural setting, which is not easy because that by definition takes time, in order for one monetary policy to work for all countries concerned in a favorable way. So it is very simple. The concept of economic policy making, you cannot isolate one instrument. That is why to have only a monetary union and not an economic union is by definition asking for trouble. And we try to, as I mentioned it, to shadow it with arrangements like the Stability and Growth Pact. But this is a shaky house. It's building a roof without proper walls supporting it. It's just floating in the air. It's a miracle that it survives. I'm not cynical about it. The digitalization is a process which has its own momentum, if only because the last 20, 30 years, obviously, digitalization, as Marcus and others have explained, I mean, this is clearly something which cannot be turned back and should not be turned back, and gives opportunities. It becomes part of life. It's part of the globalization that we're facing. That means our monetary policy needs, obviously, and our monetary instruments, in this case the euro, need to be made digital proof, not only green, sustainable proof, ideally, but also digital proof. And there's no doubt about it. And it's also no doubt that in terms of regulatory framework, there's a lot of challenges to be done. But for the digital euro to function, or for the current euro to function, in the forms of banknotes and the forms of deposits, because these are the two shapes we have now. You have either a currency in your euro in your hand, or you have it on your bank account. Now, there might be a third form, which is a digital euro. But the key that I think, and that's what Marco was explaining, is that the authorities say, fine, let's do it. And there's obviously a demand for it. And it actually would help to make the currency be used, because that's the purpose of a currency. But you have a whole set of regulatory issues that applies also to the banknotes and to the bank deposits. You now need to apply it to this digital form. This is a lot of technical work to be done. Policy-wise, I don't see many challenges. The house is still shaky.
Thank you very much, Mr. Keller. My next question is to Dr. Schuland, talking about the sustainability. Let's take a glimpse at the future, Markus, and talk about the sustainability goals for 2035. What do you expect from a sustainable finance, from your sustainable finance expert's point of view, to happen in 2035 in the best way possible? If a fairy would grant you 3 wishes regarding the sustainability finance points, what would they be? Markus, you're unmuted.
Three.
Oh, okay. Excellent.
Now it's right.
Now we
Yeah.
can hear you.
3 wishes is always a little bit an issue, because conscious of time, for 3 wishes there would be many things to discuss. But I would just take one idea as a start, the one that Ron just mentioned. He talked about the roof without the wall, so the house that's being built, and a little bit the same how the euro was started in history. There was a framework, but the underpinnings weren't available that much. And perhaps from other lectures, webinars, or seminars, there are many models of sustainable development and of sustainable financial architecture. And what they do have is a roof at top, and then you've got the pillars, either it be ESG or triple bottom line or whatever is below. And my personal wish would be to have a closer look to the fundament, to the basis of this whole building, because we can only develop in a clear way. And even what we heard about regulation has to be built on a clear strategy, has to be built on clear targets, and has to be focused in one direction, because otherwise this is something spreading. When it's about regulation, we come back 5 years or 10 years, where sustainability was no topic in the financial industry. This was more or less tree hugging, except from some institutions, some insurances going in the right direction. However, for the rest, it was tree hugging. But being tree huggers, some banks saw it's important, but we don't know how to handle these extra financial issues, and they called for regulation. This was fascinating for me when at the in the middle of the last decade, I saw many associations, many banks going to the regulator and asking, give us some kind of orientation, give us some kind of background, of disclosure requirements, of reporting requirements, and so on. And this led to kind of a framework where communication, where let's say, all what is around the disclosure things, communication, reporting, and so on are fine, and have a very strong process description and very clear targets. But when it's about the real targets, the sustainability position of financial institutions, many things still have to be done. And we just heard this in the summary, that even with the digital euro and with regulation, we're still in the beginning of many things. And if I would have the opportunity to change things, then the first thing would be have a little bit more focus. So really have a look on the key parameters that will drive our future and will impact the financial and monetary system in the same way. This is the first thing for the financial industry to change. The second thing is do not only believe, and I'm talking a little bit against digitalization right now, artificial intelligence, at least currently, is not in a position to reflect values, to have credit decisions in a value-based manner, and to have strategies where values and not only monetary values are in the focus. This would be the second thing that we need more competency in the mainstream of the financial industry, and not only among some staff divisions, among some consultants or some think tanks. This is the second wish. And the third wish is simply that we need the products, because if we've got regulation and if we've got strategies, this is something very important for a framework, and this is something very important that overcomes this short-term orientation of financial planning in the industry. If we've got a long-term view, this is fine. If we've got a long-term regulation, this is fine, but we have to put it into reality. And many concepts of banks in the past, they had trouble because having a policy and having a process does not mean that it's living, that it's working. So my third wish would be, please implement the things that you give us as a framework. And this is all, if you ask me for 3 wishes. I would have more, but conscious of time, I will leave it up to 3.
Thank you so much, Markus. I see we have so many good thoughts coming up for, I'd say, next 5 years of webinars. Thank you for sharing. Thank you, Markus. Thank you, Mr. Keller, for sharing your enormous, incredible insights with us during this webinar. As Markus said, time is limited, unfortunately, so I am here to thank you very much for your participation, dear speakers. You contributed to climate sustainability with your presentation, as UTech Chamber takes pleasure in planting a tree in Africa for every presentation held. I'm going to send you the tree certificate right after the webinar. I would like to thank every participants for their for participating in the webinar, and yeah, you're all cordially invited to join our next Finance Alliance Business Networking meeting. I'm going to share the registration link in the chat. Wish you all a very nice and pleasant day. Thank you very much for coming, and see you next time.
Thank you all. Thanks for listening. Bye-bye.
Thank you very much for having me. Success with the Alliance.